Okta is our last one. Since we're already here, we'll just do the chart real quick. Cup and handle here. We broke out. Now we're currently retesting right here. People did not like their outlook. They basically, for 2026 outlook, or sorry, for the rest of this year, 2025, they basically just like reaffirmed their outlook on their revenue and everything. And people didn't really not like that. And it's giving you a great chance to buy right here at this retest of this cup and handle. They already broke out. So if they're able to bounce here and continue higher, then you're going to see the measured move to 183.85. Again, they're well off their, almost $300 all-time highs, and it would be almost 3x from here if they were able to get back to these all-time highs, which I think on the trajectory that they're going, they will be able to. Massive, massive bullish Williams consolidation box. The stock kept running higher and higher and higher. You broke out of the Williams consolidation box. The stock went lower and lower and lower. Made your bearish Williams consolidation box. As long as you were in there, you went lower and lower. You broke out of that. You had this nice swing up. Then you broke down out of that. You never formed a box. You had to swing down. And now we swung back from green to red like the pendulum does. And now we're looking to create another Williams consolidation box for another massive run that I think this is the time that they were about to have this massive run, guys. I think they were about to form this big, long Williams consolidation box like we had back here and make this absolutely massive run back to all-time highs. I really like where this business and company is going. On a valuation standpoint, Okta, 32% margin of safety, a fair value of $155, currently at 105.08, so $50 higher from here. A $18 billion market cap, 27% and 32% forward free cash flow margin rates, really, really good for their business. Stock-based compensations, not too crazy. They do need to control it a little bit because they're only like 200 million off from what they're making in their free cash flow. So I'd like to see that reined in a little bit. Their net cash, the net debt, they have $1 billion over net debt, and outstanding shares only 171 million. And then you have your just great free cash flow yields of like almost 4% for forward and current, and then pretty reasonable PEs of 37 and 33. Reasonable, but also at the same time, the growth is, low teens and getting down to 9%, so high single digits. 37 and 32 is a little expensive for that type of growth, but these are analyst growth rates right here, and being very conservative in my opinion, because I actually believe that they can grow a lot faster in the realm that they're in, and we could see their revenue, continue to spin up to mid to high teens, and that would obviously well more justify the PE ratio. But besides the PE, I mean, I would really say all other indicators really point to this being a buy right here, right now, and to continue to buy it through June and for the rest of the year, as long as you stay, 20% margin of safety or higher. You have a 10 to 20% CAGR based on discounted cash flow and EPS here. Obviously, they're still early days in their business, so their EPS isn't going to grow as fast as, a company that's more established. They're more so focused on free cash flow and building up this revenue, because their revenue is only at 2.6 billion right now. So massive opportunity here, massive growth ahead, and just another company that I'm really looking to invest in June, and continue to invest in as if they continue to fall lower on the margin of safety, which they already did during the whole April stuff. And it was kind of funny during April. They kind of held strong through the dip and the correction and everything, because they just had really good earnings. But then this earnings, they just fell off a cliff like 10 or 15%. So those are the 6 stocks: Oscar, Google, Snowflake, OppFi, Uber, Okta. Those are the 6 companies that I'll be buying in June, and that you should possibly take a look at to see if you would also like to buy those stocks in June and add them to your portfolios for the long run. I appreciate you guys making it to the end of the video. I love you all. Thank you for being part of this amazing community that we're in. Like I said, if you want to follow me on X, want to follow me on my other social medias, or you want to take a shot and join the High Five community where investing and trading meet, You can choose the investing tier, or you can come on in and get the investing and get the trading tier all for one price. Come on in, give me a try. Let's see what we can do together, see if we can grow our financials together and accomplish some of those amazing goals that you have for your finances together in the community with all my other amazing community members. Thanks for being here. Like, subscribe, do all the good jazz, and I'll catch you guys in the next one. Peace.